Hello, everybody, and a warm welcome to this Protection Insight podcast. Joining me today is Strategic Account Manager for MetLife, Bonnie Earle. And in this podcast today, I thought it'd be really good to remind us about the MetLife protection proposition. Now, Bonnie, you've actually got two protection products for the personal protection market. And in this podcast today, very relevant to the mortgage market is what you call Mortgage Safe. And as at June 2021, we can also announce some improved commissions for the MetLife proposition. So if advisors watching this want to see what those are, you can take a look on our commission tables. So Bonnie, this is quite a new product that you launched only earlier in 2021. So can you just set the scene for me by describing what Mortgage Safe is?
Yeah, so Mortgage Safe is a type of income protection, and it's designed specifically to protect a customer's mortgage if they're unable to work due to accident or illness. And because the policy is protecting the mortgage, there's actually no need for financial underwriting because it's based on covering the monthly mortgage payment. So we've also got a really streamlined underwriting process with just 5 medical questions and a really limited look back so that we can help even more customers.
Right, that's really good. So it feels quite topical, Bonnie, because we know just how underprotected clients are when it comes to their incomes and, of course, what happens when they can't pay the basic things like the mortgage, Bonnie.
Yeah, absolutely. And that's exactly why we wanted to make this more accessible. And as providers, I think it's important that we continue to adapt to the market. And we've seen more and more people moving from being full-time employed, for example, to going self-employed. And it can be really tricky getting adequate income protection for those types of clients. So hopefully the fact that we don't financially underwrite, only need customers to have been self-employed for 6 months or more, this can really start to plug a gap as well.
Right, okay. Now, I read, Bonnie, that Mortgage Safe offers 3 different levels of cover, and I think it's important that we get into the detail of that. Can you describe what that looks like?
Yeah, of course. So keeping in mind that we wanted to keep the policy really simple and easy to understand, as you said, there are 3 cover options. You've got Core, Essential 12 and Essential 24. So the Core cover is a non-underwritten option that offers customers that aren't able to work due to an accident cover. So this will pay the customer's mortgage payment for a 12-month period if needed. Then the Essential 12 offers that 12-month cover again, but this protects customers if they're unable to work due to both accident and illness. And then finally, Essential 24 does exactly what it says on the tin. Like the Essential 12, it offers cover for accident and illness, but this gives the customer 24 months worth of cover. And with all of these covers, you've also got the option to add children's cover on for an extra £3 per month.
And I think, Bonnie, you did touch on it earlier, but it's really important for advisors to understand exactly what your approach to underwriting looks like.
Yeah, so essentially we wanted to keep things really simple and to try and help more customers. You mentioned the fact that so many customers are unprotected earlier, and I think we've all got to do our bit to address this. You know, it's not just about advisors selling more insurance, it's about providers offering different options because one size doesn't fit all. And we've tried to do this by having those 5 simple medical questions and only looking back for a really short period on those questions as well. And also, we don't look back at any family history. So we're already seeing that this is allowing advisors to have an income protection conversation with customers that maybe previously they'd been declined or heavily rated. And also, speaking of rated premiums, the answers to our medical underwriting questions also never lead to a premium being rated. So it keeps it nice and simple.
Yeah, so it is simple, isn't it? Really straightforward. So when you talk about the levels of cover available, is there any kind of formula to work out the maximum levels of protection cover?
No, it would just be based on the mortgage payment. So a customer can select cover between £200 and £1,500 to mirror that mortgage payment. And it's as simple as that.
Okay, well, let's talk about how we apply for cover, Bonnie, because I
Okay.
think that's quite an important journey to understand for advisors watching this.
Yeah, and it is really, really simple. So you just go to our portal, same way that you would with Multi-Protect, log in and then click on Mortgage Safe tab to get started.
Right. And just like your other product you mentioned there, Multi-Protect, is there any additional cover available with Mortgage Safe?
Yeah, so with Mortgage Safe, there's additional cover available for children at a cost of just £3 per month. which is cover for all of your customers' children as well, including stepchildren. It's obviously not linked to the mortgage. It's simply there to help families get back on track and manage any unexpected costs associated with their child having an accident or an illness. So the cover provides a lump sum of money directly paid to the customer to help support them through the sort of disruption of their normal day-to-day life if their child is unlucky enough to either break a bone, spend some time in hospital, or even to be diagnosed with cancer.
Right. Okay. So just thinking about it then, let's say I've got a couple of first-time buyer clients, we'll call them Tom and Tina. Both of them are self-employed. They've got no protection in place at the moment. And if I've just arranged the mortgage, which costs them about £500 a month on a fixed rate for the next 5 years, I've had a conversation with them about the various protection risks, and I want to recommend some cover that will help them pay the mortgage each month if they find themselves in a position where they can't work due to accident or illness. This fits for that, doesn't it?
Yeah, okay, so you're looking at one of the essential covers because you want cover for accident and illness. And do Tom and Tina want to be protected for 12 months or 24 months?
I think 2 years.
Okay, so that's nice and easy then. So that would be essential 24 for the cover. And that will provide the accident and illness cover. So you've got a 4-week waiting period, so a 4-week deferred period, a 24-month benefit payment period. So we'll pay the claim for up to 24 months after your waiting period. And also, don't forget, there's only just a few health questions for them to answer. And I presume they'll both be taking the cover.
Absolutely, of course. So in terms of the quote and application process, what does that look like, Bonnie?
It's dead easy. When you go onto our platform, you would select Mortgage Safe and you'll be asked some qualifying questions like age, occupation, monthly mortgage payment and term. And once you've completed this screen with all the qualifying data, you'll be taken to the next screen, which gives you the 3 cover options and then a price for each of them. So you then just simply select the level of cover. If you select core, there's no underwriting, so you would just go on to complete the application with direct debit details and so on. But if you selected Essential 12 or 24, you then go on to the 5 medical underwriting screens. And don't forget, the responses to the medical questions won't impact the premium. The only potential outcomes would be that the case would be accepted straight away. We might need some more information before making a decision. There may be an exclusion, and in some cases we will have to decline. But don't forget, you've always got that option of going back to the core cover because that's the non-underwritten cover.
Yeah, absolutely. So I think we touched a little bit on this, but how would you describe the ideal target market for Mortgage Safe?
It's ideal for self-employed customers because of the absence of the financial underwriting and the back to day one cover. Also first-time buyers or customers on a tight budget because it's really affordable option. And don't forget those with families as well because we've got that children's cover add-on. And if you're thinking sort of premium wise, at the moment we're coming up most competitive. If you think age range about sort of 25 to 45-year-olds, and especially category 3 and 4 jobs, we're coming up particularly competitive. But the key thing is to give it a try and quote on the next few customers you've got, and hopefully you'll see how competitive it is, along with being a really innovative product.
Okay, brilliant. Well, thanks for joining us today, Bonnie. That's really good. I think a comprehensive look at the product, and hopefully advisors can get a bit more comfortable about using this and recommending it to their clients. So thanks for everyone for tuning in. Obviously, thank you for your time today, Bonnie, and we'll see you on the next one. Bye for now.